Flaming enthusiasm backed up by horse sense and persistence is the quality that most frequently makes for success. Dale Carnegie. And old Dale is 100% right. You've got to have flaming enthusiasm day after day after day in these markets because they are phenomenal. Think about what we have to do. All we have to do is make the right determination on price movement. Sounds simple? Well, if you follow our weekly vertical crossovers, at times it sure can be. Won't you study with us every single day? 10 to 15 minutes, that's all we ask. Learn how we do this practice trade. It's free. Let's jump into these charts. I like to see what I have been seeing today for the most part. We see the S&P 500 and the NASDAQ 100 down for the day. S&P down 0.46%. The NASDAQ 100 down the most, 1.88%. We see gold down also at 0.45%. And bonds popping up. Now, I would like gold to be up too if stocks are down, but we'll talk about that when we get there. What do we see going on? Well, we did reach so far this week a bit of a higher high. We see the high 191.40, the previous high 187.30, 186. So again, 187.30, previous high 2 weeks ago. And so we do see the derivative oscillator continuing to lose downward momentum. Price percent oscillator heading up. One down day doesn't mean everything's rolling over, but it's interesting to watch and look at. We go to the 2-day chart. What do we see there? Well, that 2-day chart continuing to tick up. Again, we see as far as the candle goes, it reaching a higher high. This represents Tuesday. That candle will finish drawing on Wednesday. Derivative oscillator losing momentum, price percent oscillator continuing to head up. So we will continue to watch and see if this down day is just an anomaly, if the rest of the week it'll continue up. We see things up in the morning and then pulling back in the afternoon. The 4-hour chart sort of crossed over in the morning, didn't quite cross back over in the afternoon. We'll watch and just see. Overall, things, again, the overall mood on the weekly is still down, even though we could be going into the 4th week of up movement. And we see that 2-day chart. What did I just say? Did I say yes, the overall mood is down. The 2-day chart overall mood is up. Again, the price percent oscillator heading up. Derivative oscillator, again, peaked as we talked about with that sideways slide. And again, that is the leading indicator. Doesn't mean that we're getting ready for a crossover. That could change, but it means that the level of price movement up has slowed. That's what that's showing us. And we see that as far as the price percent oscillator, which is the percentage version of the moving average convergence divergence, we see the lagging indicator continuing to move up. So we'll watch. We'll just see how things sort out. Whichever way it goes, my friends, we'll deal with it. But with the weekly already negative, if that 2-day crossed over going down, I personally, with all the drag on the economy from everybody being out of work for going on 6+ weeks now, would rather see the market moving down. That way I'd practice trade, of course, SH, which is an inverse fund, as well as look at buying puts. I would also look at practice trading those, but whichever way the market goes, we'll let it lead us. Now, let's leave the S&P and go to the Qs, which was down the most for the day. Still trying to cross over. That won't be called until and unless it happens on Friday. If it bounces off, rotates back over going down, that would be fine with me too. If it wants to cross over going up, fine. We are hitting a little bit of a higher high, 117.32. The prior high, 116.51. So we'll continue to watch. Derivative oscillator still negative. Price percent oscillator trying to cross over. Go to the 2-day chart. Of course, it's been going up since the 2-day candle ending the 17th of April. Went up really through about the 17th and then sliding sideways, but tending up since then. Price percent oscillator still heading up. Derivative oscillator peaked back on the 17th and has been heading down since then. So we'll continue to keep an eye on things there. 4-hour chart shows a spinning top in the morning and down movement pushing through the 2-day trend line in the afternoon. Let's just see where things go on Wednesday, and we'll let the charts lead us. We do have a great training for those of you who are subscribers, backtracking. It is about pushing away on Wednesdays, looking back at the weekly chart and seeing just what's going on, giving yourself the big picture midweek. I hope you'll take that training today. It's available for free in the show notes to subscribers. If you're not a subscriber, go to chartingwealth.com, sign up for free, and also click the bottom button on the right-hand side of your screen if you're listening to us on YouTube, and subscribe. We'd sure appreciate it. What do we see going on now as we leave stocks, waiting to see how those sort themselves out, and we go to bonds. Bonds up for the day 1.15%. We have a red open box candle, which again means a slowdown in the up movement. It's not a solid red down candle, but it does mean that the up movement's slowing significantly. We can see the price percent oscillator losing, starting to move down a little bit, flat to down. Derivative oscillator peaked all the way back on the 6th of March. And as the week ending then has continued to decelerate since then. We go to the 2-day candle. What do we see there? It bounced off the red signal line and, of course, is heading down at this time. What we see really is a sideways slide tending down since then. Prices really just sort of staying right on that weekly trend line, which is interesting as far as the 2-day candle goes. Of course, if it rotates back over what we'd call a recross going up, that would be nice. But one day up 1.15% doesn't turn it around. We'll continue to watch. What about the 4-hour chart? It's still negative. Isn't that interesting? So we'll wait and see what it's going to do. Again, sort of lackluster in the morning, gains some momentum in the afternoon. Derivative oscillator lost downward momentum. Price percent oscillator almost flat, but still heading down. So we'll just watch and see how bonds sort themselves out. Now, lastly, on our big 4 charts, we go to gold. What's going on with gold? Well, gold down for the day 0.45%. Just can't get its momentum up. We're waiting, watching, seeing what gold is going to do, but not hitting a higher high this week, lower than the 2 prior weeks at least. Yep, lower than just the 2 prior weeks. Price percent oscillator still heading up. Derivative oscillator still barely negative. Maybe we'll get some up days, Wednesday, Thursday, or Friday, maybe all of them, but not happening yet. Go to the 2-day chart. It is less than flat, heading down, although it still is positive. Price percent oscillator, so heading down a little bit. Derivative oscillator losing upward momentum. And we can see this latest candle is a red down candle with a wick on the bottom, pushed through the 2-day trend line, still above the weekly. We go from the 2-day to the 4-hour. We see that 4-hour chart heading down. Down in the morning, a little bit of a recovery in the afternoon. We're just going to have to wait and see how gold sorts itself out. I sure would like to buy gold, but we're going to have what happen? Well, we've got the 2-day and the weekly up. 2-day is still up. If that 4-hour chart could just rotate over, it could give us a jumping in point. Wouldn't feel super excited about it. I prefer, of course, number 1, to have a weekly vertical crossover when it's fresh. Number 2, a recross on the 2-day chart. And my last option is the 4-hour recross. So we'll see. We'll wait and see how that works out. Now, interesting news for you on the front of OIL. Those who've been reading about OIL, we talked about this yesterday. No movement. Well, guess what? The issuer has exercised its call option of the ETN. What does that mean? This is happening now. I think I read today 200 ETFs are being called, as it were. What does that mean? That means that the issuer is calling them because of volatility and problems. And of course, once you go below $10, once you go below $5, you start having problems even staying listed. So that is part of the problem. And then, of course, all the fluctuation, oil going negative on contracts, those kinds of things. So they're calling it. I think they're calling it at $3.75, I think is what I saw. So anyway, that is where things are. So oil is out. we'll find another one for you. But before I jumped into another, I just wanted to tell you that's where we are on OIL. And we'll talk about looking for another one of these to track for you. But that does happen. We do have issuers. They are allowed to close these things. And when it gets crazy volatile, prices go below certain levels, the issuer can call it. And that is what they have done. Now, let's talk about Bitcoin. Up for the day a little bit, 0.79%. And of course, we want to start on the weekly. What do we see there? Well, the price percent oscillator still negative, but heading up. Derivative oscillator negative, losing downward momentum. Have a nice green candle forming. No wick on the bottom. And I don't even see much. I don't see any wick on top. Little bitty one. So again, nice candle showing that Bitcoin is, of course, trying to recover and is moving up, waiting for that crossover going up so that we have a crossover that we can count on. Shows a huge change in trend, particularly when it's on the weekly chart. Two-day crossed over back on the 15th and again continues to move up. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Go to the 4-hour chart. What do we see there? Up in the morning, further up in the afternoon. So Bitcoin trying to see if it's going to solidify that bottom crossover going up on the weekly chart and give you the opportunity to do a practice trade on it if that's what you are interested in. Now, lastly, we go to real estate, up for the day 0.82%. And of course, real estate is sort of range bound in here somewhere around the $75 mark. Price percent oscillator has ways to go before it crosses over going up. It is less than flat, headed up a little bit. Derivative oscillator losing downward momentum. We go to the 2-day chart and we see the first day of this latest 2-day candle bumping up, going up to a high of 77.80, prior high 79, so not quite up to where it had hit previously. Again, I said it was range bound. Price percent oscillator heading up, not super strong, but is going up. Derivative oscillator positive, losing upward momentum. Go to that 4-hour chart. Had that crossover in the afternoon on Monday. Booming up in the morning on Tuesday and losing a little bit in the afternoon. Like we said, settled out at 0.82% up. So again, real estate trying to find a bottom. Bitcoin trying to move up and establish a crossover. We'll see what happens. Oil dead as a doornail. And we'll continue to watch where things go on gold, where things go on the S&P 500, the NASDAQ 100 and 20-year bonds. Friends, if you're not filling out your daily market worksheets every day, you are missing a prime opportunity to really accelerate your learning. Those daily market worksheets are PDFs. They're attached in your show notes every day. If you look on the YouTube channel in the show notes, if you look at our website in the show notes, or if you look in the email, if you're a subscriber, you will see a PDF, daily market worksheet, weekly market worksheet, trade worksheet. Throughout the course of today's video, I have salted in there links to how to use the daily market, weekly market, and trade worksheet. Man, you want to supercharge your training, create your own trader's library, your own trader's Bible, your own trader's journal, whatever you want to call it. Print those out and use them. We have a pre-printed 3-month copy for sale, but you don't have to buy it. You can just print them out for free and use them. But if you want to, it's bound, and you can find the link in your show notes to that. I don't want to push that. I want to push you using the daily market, weekly market worksheet once a week and trade worksheets. They help you document what you're thinking, why, and they give you a history as to what you've done, plus the notes that you make from what you've learned are what is so key. Don't ever do a trade without filling out that trade worksheet when you're doing practice trades. Folks, that's where we are as we end the day. Again, take that special training, all of you who are subscribers. You're not a subscriber, go ahead and subscribe. If you want a copy of our book, have an autographed copy waiting for you, Charting Your Way to Wealth. We so appreciate you. Thank you for the new Patreon supporters. We'll be sending out all of your free extra training materials, short chart training, long chart training, Bitcoin training, and all the other special trainings. Plus, in a week or so, beginning of March, we will have on that Wednesday for you our live question and answer call-in special training For our Patreon members, it starts at just $1 a day, $30 a month. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.